Hello, investors. Welcome to another S&P Stocks video. Today, we're excited to present the first episode of our new series, Deeper Analysis. This series aims to complement our 1-minute analysis videos by providing you with an even more comprehensive understanding of your investments. As the name implies, Deeper Analysis delves further into the world of stocks, utilizing a broader range of analysis concepts, particularly those related to fundamental analysis. Although we won't cover everything S&P Stocks uses in our internal analysis, Deeper Analysis will offer you greater insights into a company's financial health, business model, competitive landscape, and many other aspects. We'll also guide you through the key metrics and factors that contribute to our final opinions and conclusions. We're kicking off this series with a deep dive into a rather well-known company, Google. Remember, this video doesn't cover every single aspect of our internal analysis. That said, let's start exploring. First up will be our technical analysis, a metric with an impact that ranges from 5 to 10% of our final analysis. Technical analysis is the study of historical price data and various patterns to predict future price movements. It's important because it helps us identify entry and exit points for trades, as well as potential trend reversals. The weight assigned to this factor reflects its role in supporting our overall decision-making, and at 5 to 10%, you can see it's important, but far from being the primary driver. Then we have sector performance. Accounting for 5 to 15% of our final analysis, sector performance involves examining the performance of an industry or sector in comparison to the broader market. It's crucial because strong sector performance can indicate a favorable environment for a company to grow and succeed, and provide solid context for a stock's potential growth. The next factor is speculation and risk management, where we assess the level of speculation on a certain asset and the risk associated with that particular investment. This factor weight ranges from 10 to 20% of our final analysis, and it's important because it helps us determine whether the potential returns are worth the risk involved. By carefully managing speculation risks, we can be more prudent with investment decisions and help our clients to protect their portfolios. Our fourth factor is market news and sentiments. Representing a significant 20 to 30% of our final analysis, this key metric involves keeping abreast of the latest news, events, and market sentiments that could impact the stock's performance. It's vital because external factors and market psychology can influence a company's share price, sometimes even more than its financial performance. The weight associated to market news and sentiments underscores its importance in helping us stay informed and respond to changing market conditions. This factor is usually assessed together with speculation issues. Last, but certainly not least, we have our favorite, the fundamental analysis, which weighs 50% or more in our final opinion. For us, it's by far the most crucial factor in our decision-making. This metric involves evaluating a company's financial health, business model, competitive landscape, and other aspects that drive its long-term value. It's essential because it allows us to determine whether a stock is overvalued or undervalued, and whether it has strong growth potential. By focusing on a company's fundamentals, we can make more informed, long-term investment decisions that contribute to portfolio growth. Now that we've introduced the key metrics and factors, let's dive deeper into our analysis of Google. As mentioned earlier, the first metric in our Deeper Analysis series is technical analysis. Although this method can be quite extensive, we'll focus on the most relevant aspects. In this case, we're examining the moving averages, or MAs, represented by the blue, pink, and yellow lines. These MAs help us to understand the stock's trend based on its past movements over specific periods. We're using MA 20, 50, and 100, which focuses on the last 20, 50, and 100 days. This helps us gauge the stock's short, medium, and long-term trends as bullish, neutral, or bearish. For Google, the short-term trend appears neutral, with support at 89.4 and resistance at 108.8. The stock is likely to fluctuate between these values and will need to break either boundary to form a new pattern. Currently, it's 18% above support and 3% below resistance. The midterm trend seems neutral, with a slightly lower support at 83.5 and a higher resistance at 112.3. The long-term trend appears neutral as well, with support at 86.7 and resistance at a high level of 123.1. While other technical analysis techniques like Bollinger Bands and Fibonacci retracement are part of our internal analysis, we believe these trend overviews are the most relevant for this video. Considering all factors, our rating for Google stock from a technical analysis standpoint is somewhat neutral, and we're giving it a C-. Next, let's discuss sector performance, focusing on the technology sector in this case. In recent years, the tech sector has been performing well, leading to high expectations. The market anticipates a yearly growth of 21% over the next 5 years, which raises concerns for us. As a result, despite the sector's strong performance, we rate it as a D- at this time. This projected 21% growth is closely linked to our speculation and risk management factor. We believe that this expectation may be causing overpricing in several stocks within the sector, including Google. On a positive note, Google stock has already experienced significant losses following the release of Chat GPT, which suggests that speculation might not cause further substantial damage. Taking all speculation and risk management factors into account, we rate Google stock as a C+ in this area. Moving on to market news and sentiments, this is a crucial factor in our analysis, even when there are no significant positive or negative events. It helps us gauge the market environment, at least in the short term. For Google, the most relevant news at the moment revolves around Chat GPT and the artificial intelligence competition, where Google seems to lag behind competitors like Microsoft. This has led to the integration of AI with Bing, Microsoft's search tool, which historically underperformed compared to Google. However, after this integration, there's even a waiting line to use the new Bing. As mentioned earlier, we're only covering the most crucial aspects of our analysis. There are numerous other news and sentiments we've considered but won't discuss here. One interesting point that sparked debate within our team is the crowd's cheering issue. It may seem minor, but in today's world, we can't ignore the influence of prominent internet personalities who are either Google lovers or Google haters. An event like Chat GPT provides an opportunity for both types of influencers to generate significant buzz, and it's challenging to gauge the resulting impact on Google. The overall sentiment of news items appears to be negative for Google. However, it's essential to consider that the stock has already been affected by these events, and we're just witnessing the beginning of this new AI battle. Google has some time to recover and present a competitive AI solution. With that in mind, we rate the market news and sentiments for Google with a B. Finally, we arrive at our favorite metric, fundamental analysis. For those familiar with our 1-minute analysis, you'll notice that we've included additional metrics here. However, it's important to remember that although these metrics are essential and helpful for decision-making, there are countless other metrics beyond them. Google has excellent financials, profitability, and EBITDA sales. Its sales growth is fair, earnings growth and earnings quality are good, PE and PS ratios are fair, EV sales is poor, but the company holds significant potential. As shown, Google's fundamentals are generally strong, with the exception of the enterprise value per sales ratio, which is in poor condition. For this reason, we rate Google with an A from a fundamental analysis standpoint. In summary, our deeper analysis yielded the following ratings: C- for a technical analysis, D- for sector performance, C+ for speculation and risk management, B for market news and sentiments, and A for fundamental analysis. Taking into account the varying weights for each metric in our analysis process, the final rating for Google stock is a B. As is customary, our team likes to provide a straightforward conclusion after extensive analysis, so here's what we have. In our view, the risk associated with Google stock is low. Our current consensus for the stock is a buy. And now we'll share something typically exclusive to our clients, but for this first episode, we'll make it available to everyone. Our current average target price for Google is set at $128. For those seeking more information, such as the fair value of the stock, high and low target prices, as well as easy-to-understand reports featuring even deeper analysis of over 3,000 stocks, we invite you to visit our website at www.spstocks.com. Join us to gain access to valuable insights and make informed investment decisions.